Hello, everyone. Cathy Sabater, mortgage broker and proud veteran. So we know that the Fed's reduced the what? The Fed fund rate. But what does that mean to you? So we have a coupon, mortgage-backed securities. So what are they really? Because I've talked about it before. Basically, what they do is they take a whole bunch of loans, they put them together, and they sell them. Okay, so those could be VA loans, FHA loans, 5% rate, 3% rates. They bundle them all together and they sell them. Okay, so those are mortgage-backed securities. So what is price versus your rate? So yes, rates have gone down. The question at hand now is, how much does it cost you to get that particular interest rate? Okay, very important. And then how is the Fed impacting us? Because remember, the Fed fund rate, unlike the mortgage interest rates, theirs is what? Short term. Mortgage-backed securities are long term. So this is what it all means, okay? What really affects our mortgage interest rates are inflation, jobs, and how the investors take an outlook, because they're the ones buying those mortgage-backed securities. When we had interest rates below 3%, those mortgage-backed securities were being packaged up, and guess who was buying them? The government during COVID. And hence they kept the mortgage rates low. We had low inflation, right? Because a lot of people weren't working. So what do we have to look forward to? Well, CPI report is coming out Friday. So if we have a lot of jobs, it'll be interesting to see how the mortgage rates are going to be affected. Usually, if there's a lot of jobs, then interest rates may stay about the same, may go higher, okay? Because right now, people are saying, well, you know what? I'm just going to wait for the rates to go down. Well, guess what? When everyone knew that the feds were going to cut the rate, we had already seen the interest rates for mortgages decrease, so to speak, in the anticipation of them cutting. So what is the other thing we have to worry about? October 3rd. So when October 3rd comes, when I was talking about the jobs, what will happen to our interest rates? So if we don't create a lot of jobs, that means we're going towards a recession, which means interest rates go down. That is what this is all about, is trending the market. So don't chase the label, okay? People are going to refinance, but be careful on what? Price versus what? The cost, okay? Now, if the payment works, you want to save $200 a month, you want to save $300 a month. If it works, lock the rate, okay? Then what's your story? Why should you refinance? Everyone has a different story. I will then take a look at your mortgage statement, ask you a couple of questions, meet you via Zoom, and we're going to create a refinance plan for you. Because for some people, it is the cost for the rate worth it. And that's where the analysis comes in. So give me a call at 619-846-2675. I'm having fun, and I'm looking forward to answering any questions you may have. Have a phenomenal evening.